What is Tesla really worth? Tesla sells cars, but if Tesla were valued like an ordinary car manufacturer, its story would look very different, because investors aren't only betting on the cars Tesla sells today, they're betting on what Tesla could become tomorrow. Robotaxis, artificial intelligence, humanoid robots, energy storage, autonomous driving, and potentially an entirely new transportation network. That's what makes Tesla one of the most fascinating companies in the stock market. In the second quarter of 2026, Tesla delivered more than 480,000 vehicles. Its energy storage business deployed another 13.5 gigawatt-hours. Yet the stock continues to divide Wall Street. Some investors believe Tesla could become one of the defining technology companies of the next decade. Others believe the market is already pricing in a future that may never arrive, and both sides have a point, because Tesla is caught between two identities: the company it is today, and the company Elon Musk says it can become tomorrow. To understand whether Tesla's enormous ambitions make sense, we need to go back to the business that started everything: the car. Chapter 1: The business that built Tesla. For most of Tesla's history, the story was relatively simple: build electric cars, make them desirable, make them cheaper to manufacture, and eventually replace gasoline cars around the world. Tesla proved that electric vehicles didn't have to be slow, ugly, or boring. The Model S changed people's perception of what an electric car could be. Then came the Model 3, and the Model Y. Tesla went from being a risky Silicon Valley experiment to one of the largest electric vehicle manufacturers in the world. But today, the challenge is different. Tesla isn't the only serious player anymore. Traditional automakers have invested billions into electric vehicles, and Chinese manufacturers have become increasingly important competitors. Companies like BYD have demonstrated that China can manufacture electric vehicles at enormous scale and compete aggressively on price. That puts pressure on Tesla's original money machine, the automobile business. But 2026 has also shown why writing Tesla off as simply a declining EV story can be dangerous. In the second quarter, Tesla delivered more than 480,000 vehicles. That's a major rebound from roughly 358,000 deliveries in the first quarter, and it was significantly higher than the roughly 406,000 average estimate Tesla had compiled from sell-side analysts before the quarter ended. So demand for Tesla vehicles hasn't simply disappeared, but investors now face a different question. How much future growth can realistically come from selling more cars? Because manufacturing automobiles is expensive, factories cost billions, competition pushes prices down, new models require enormous investment, and eventually every successful car manufacturer faces the same problem: margins. This is why Tesla's future increasingly depends on businesses that look very different from the company that built the Model 3, and one of them is already becoming impossible to ignore. Chapter 2: Tesla's other business. Tesla doesn't just sell cars, it also sells batteries, and increasingly massive batteries. Megapack systems can store electricity at grid scale. When renewable energy produces more electricity than the grid needs, that energy can be stored and released later when demand rises. This sounds much less exciting than a robotaxi, but financially, it could become one of Tesla's most important businesses. In the second quarter of 2026, Tesla deployed 13.5 gigawatt-hours of energy storage products, and Tesla has continued investing in additional Megapack manufacturing capacity. This matters because the global energy transition creates a massive problem. Solar panels don't produce electricity at night. Wind turbines don't always produce power when consumers need it. The more renewable energy enters the grid, the more valuable large-scale energy storage can become. So underneath the headlines about Elon Musk, autonomous cars, and humanoid robots, Tesla has been building another business, one that has almost nothing to do with selling cars. But even energy storage isn't the reason some investors believe Tesla could eventually be worth dramatically more. For that, we have to talk about the biggest bet in the entire company. Chapter 3: The Robotaxi Bet. Tesla'nın bugünkü değerini alaziska satihi otomobillerle aklamaya çalışırsanız, hikayenin bugü bir bölümünü kaçırırsınız. Çünkü Elon Musk'ın Tesla için en bugü iddialarından biri, daha fazla otomobil satmak değil, otomobilin çalışması şeklini tamamen değiştirmek. Robotaxi. Imagine waking up in the morning, opening an app, and ordering a Tesla with no driver, no salary, no tips. Just an autonomous vehicle arriving at your door, taking you to your destination, and immediately leaving to pick. If Tesla can make this work at enormous scale, the economics could be completely different from selling cars, because Tesla would no longer make money when it sells the vehicle. It could potentially make money every time that vehicle moves a passenger. Think about the difference. A traditional automaker sells you a car, and the transaction is mostly over. But an autonomous transportation network could potentially generate revenue, day after day after day. That's why autonomy matters so much to the Tesla. Tesla is working toward unsupervised autonomy for both a dedicated robotaxi fleet and customer-owned vehicles. Its purpose-built cybercab has also been targeted for volume production beginning in 2026. But it has to work. Tesla's current FSD system is still described by the company as FSD supervised. The driver it does not make today's customer vehicle fully autonomous, and that's the gap investors are betting on. The difference between supervised driving today and true A. If Tesla's success Robotaxi could fundamentally change the company. If it doesn't, then a major part of the future investors expect from Tesla may need to be reconsidered, and somehow, Robotaxi isn't even Tesla's most ambitious bet. Chapter 4. The Rob. Its name is Optim. At first glance, a humanoid robot seems completely disconnected from but from Tesla's perspective, the technologies overlap. Cameras, artificial intelligence, neural networks, computer vision, batteries, motors, and manufacturing. Instead of teaching an AI system to understand the world and move a car through it, Tesla wants to teach another AI system to understand the world and move a human-shaped machine through it. The long-term idea is enormous: factories, warehouses, manufacturing, and eventually, potentially everyday tasks. Tesla has increasingly positioned AI, autonomous vehicles, and humanoid robots as core parts of its future rather than side projects. And this is where Tesla becomes extremely difficult to value. Because what exactly are you buying when you buy Tesla stock? An automaker, an energy company, an artificial intelligence company, a robot manufacturer, or a future transportation network? The answer is potentially all of them, but that's also the risk, because investors aren't only paying for businesses that exist today. They're assigning value to businesses Tesla still has to prove it can build. Chapter 5. The Tesla Investment Case. And that brings us to the most important question. Is Tesla a good investment? There isn't a simple answer. The bullish case is powerful. Tesla still has enormous manufacturing scale. Q2 2026 deliveries reached 480,126 vehicles versus roughly 358,000 in Q1, while energy storage deployments reached 13.5 gigawatt-hours. Then add the possibilities: Robotaxi FSD, Optimus energy storage, AI. If even some of these businesses become successful at enormous scale, the Tesla of the future could look completely different from the Tesla of today. But the bearish argument is equally important: cars remain a crucial part of Tesla's current economics. Competition is intense. Building AI infrastructure, factories, and new products requires enormous capital. And future businesses like autonomous transportation have to move from ambitious promises to scalable economics. That's why Tesla stock creates such extreme opinions. One investor looks at Tesla and sees an automobile company carrying enormous expectations. Another looks at exactly the same company and sees an AI and robotics platform before those businesses reach maturity. Neither side is really arguing about today's Model Y. They're arguing about 2030. What are you actually buying? Tesla began by proving something the automobile industry once doubted: that electric cars could become desirable, fast, and mainstream. But Tesla's next challenge is much bigger. It has to prove that it can transform again, from cars to energy, from energy to artificial intelligence, from driver assistance to autonomy, and perhaps from machines we drive to machines that work for us. That's what makes Tesla one of the most fascinating investments in the world, and one of the most difficult to value, because when you buy Tesla stock today, you're not simply investing in the cars Tesla is selling right now, you're making a bet on the company Tesla might become tomorrow, and that future is far from guaranteed.